Alright guys, welcome back to another video. So in today's video what I'm going to be showing you guys is a new way of getting entries on a candlestick chart. Okay, so as you can see right here, I have the GU chart up on the daily time frame, and today what we're going to be talking about is continuation candles. Okay, so briefly, if I go to the corner here and I grab my rectangle tool to draw some candlesticks. So for example, let's say that we are in a bearish trend like this. We have bullish candles, bullish candle, bullish candle, okay, and then we have one bearish candle in between all that, okay, which has a wick to the downside and a fairly large wick to the upside too. So it has decent sized wicks. The wicks aren't small, okay, and then what you get is a continuation. So you get a bullish candle. So just so and so. So if you take a look here guys, you can kind of understand why we call it continuation candle, because it continues the trend. What it does here is it can go down, fill in any imbalances that we had in that candle, or it can also manipulate traders. So for example, sometimes what continuation candles do is this day closes, this day opens up. So what this day does is it opens up, trades bullish, maybe hits a resistance zone, and then reacts, goes all the way down. People think that it's going to bearishly engulf, but no. So it trades like this, weak, okay. So it leaves two wicks to the top and to the bottom, and it's a sign of weakness. And then what does the market do? It goes nope, and it continues to the upside. Okay, so to show you the same example on a chart, and by the way, this applies to both bearish and bullish setups. Okay, so if I go to the side here, okay, so for example, what do we have here? So I have my bearish trend, okay, so we have bearish candle, bearish candle, bearish candle, then bullish candle. So continues the trend. You have a large wick up and a wick to the bottom, and then bearish engulf, bearish candle. Okay, so let's take a look what happens here. Now, such as our IC candles, where do we take our entries from? Very, very simple. We look for the entry from our open of the candle or the 50%, okay, depending on if there's an imbalance inside the candle or not. And then we place our stop loss right below the close of the candle, depending on the size of it, or the wick. Now, anyone that has watched my videos before or stuff like that, they know the other confirmations. Today, what I'm not really showing you guys is my confirmations and when you should take this, etc. I'm only showing you an entry point. Okay, I'm only giving you an entry that you could possibly get instead of an IC. Okay, so you can choose to get in instead of an IC or an imbalance on a continuation candle instead. Okay, I'm not showing you to identify the market structure or such. You'd have to kind of know that already, or you'd have to have watched my previous videos or teachings, whatever. Okay, so same thing here. What do? We look to enter off the open or the 50%. So in this right here, boom, place your entry or sell limit off the open, or you can just mark execute when it reaches the open, and you can see what did it do. If we dropped into the lower time frame, just to show you, price came up, okay, waked up in here, and then boom, away it goes. Okay, fairly simple. You can find this on most time frames, but I usually prefer to take them off the daily time frames, especially off the daily time frame. Very, very high probable. So let's look for another example. Let me jump back to my daily time frame, and let's take a look at here. Okay, so what do we have here? I have bullish candle. Actually, let me just use my my arrow. So I have a bullish candle, bearish candle, and then bullish. So we can see that this is a bullish trade range. Okay, fairly simple. What do we have here? Large wick and a wick. Okay, now what did the market do? Let's take a look. So the market obviously went up, came down, made a pullback, okay, lower high, and look where the market traded into. Let's draw a line from this wick, boom, straight onto the open. Look, absolute sniper entry. What did the market do? Boom, away it goes. Okay, so let's take a look right here. Where did the market react from this area? So let's just draw a line from this wick, and let's see where it reacted from. It reacted from the open of this continuation candle. So see how you could have easily played ping pong right here on GU. Okay, so bearish, bearish, big wick, continuation, bearish. Wait for that retest, open or 50%, depending on other confirmations. Away it goes, create a new lower low. So you could have easily caught, first of all, a nice 200 pips to the upside, and a nice nearly 300 pips to the downside, and all it would have taken was around 7 days. Okay, just a week of trading. That's all you would have needed. Now obviously continuation candles aren't bulletproof or isn't the holy grail, anything like that. Obviously it doesn't work sometimes, like here for example. In this example it did work. Okay, so see continuation, boom, sign of weakness, see the big wick, close like that, and then boom, came a reactive area, dropped again. But it's like for example this, well, to be honest I wouldn't really consider this a continuation candle because it's too much of a small body, but there are some examples where it obviously doesn't work. We might have some examples where it just doesn't work. So let's see here for example. Okay, bullish, bullish, bullish. This was kind of in a consolidation really. Doesn't really count, but obviously it's just not going to work sometimes. Okay, see that, and just blew right through it. Okay, but another example that I can show you from here, see how we have a bearish trend here, literally no bearish candle except this one right here. So let me draw a box to highlight it and drag it, project it into the future. Okay, see how the market traded right into that area, continuation candle, and away it goes. Easy, another 283 pips. So that's pretty much it, guys. As I said in this video, all I wanted to highlight was just specific entry points that you could get in on a candlestick chart using continuation candles. Now obviously if you want more of my teachings, etc., if you want to learn the whole Smart Money course and get access to our signals, our weekly Zoom calls, we're actually coming out with a brand new Smart Money course, an updated one to the previous one we had. So brand new videos, very, very detailed. I think a lot of people would really find them helpful. So if you want to get access to that, make sure to head onto our site, FU Signals. Let me write it correctly, fusignals.com. Okay. There we go, fusignals.com. And then head down here and get access to one of the packages. So you have the 1 month, 6 month, and the lifetime membership. Obviously each one comes with some extra stuff. For example, you can get access to one-on-one personal sessions on the lifetime. You can also get access to all our free seminars, all our paid seminars for free, and in these two you can get access to direct master trader. So you can text me personally with your setups, questions, etc., and I'll do my best to answer them for you, but you can get access to that here. But obviously the monthly membership as well includes the daily signals, the market analysis calls, trading discussion groups, which are actually one of the most active group chats that I've ever been in personally. Okay, so our team is very, very highly knowledgeable as well, and if you wanted to ask any questions, people in there would get back to you ASAP. Okay, so thank you guys so much for tuning into this video, and I'll catch you guys on the next one. Have a good day.